Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York. It is Wednesday, February 15th, 2017, and this is the Daily Report for Gold and Silver. We do have stronger precious metals pricing across the board with approximately 0.5% gains in each of the precious metals. First, we'll look at gold. Gold trading up about $8.50. This, of course, bases April's futures contract, currently trading at $12.3380. It has traded to a low of $12.1750 and a high of $12.3440. So as you can see, we are distinctly close to the highs, and it did make a pretty extreme low today. So the question we will ask ourselves as we pull up our first chart is whether or not we have in fact seen the bottom to this short-term correction that began a couple of days ago. Now, when we look at gold in terms of spot pricing, although the net change is different, up about $4, the price is pretty much the same as we get closer and closer into April, and those two prices kind of merge together. $1232.57, that is the current price of spot gold. Take a quick look at silver. Silver also trading higher today, up about 0.4%, but below $18 at $17.97 with a low of 75 and a high today of 99. So traders, absolutely no doubt a strong upside move in gold today, closing up about $8. But more impressive than the upside move is really how it traded with extreme volatility, broke hard to the downside. You can see these lows that exceeded 1220, actually the low 1217.50 coming in, and then a resilient recovery as the market actually moves back towards the opening price and then closes higher than the opening price. And that by virtue of the green candle, meaning this $8 move today. And considering the size of the tail and where the market is located, and the fact that we have seen this market trade lower over the last couple of days, I am going to label this particular candle type a hammer. Now, a hammer, of course, is a single-day candlestick type that has a very, very tight relationship between the open and closing prices, and it has a tail that is at minimum of 3 times the distance of the body. And so you might not have a full 3-time distance. The longer the tail, the better, because what it tells you is the more extreme lows were able to be taken out, and that when it hit those lows, buyers entered the market and moved the market to higher ground. And so for those reasons, I believe that there is a high probability at this point that in fact we have weathered this recent correction, because realize that in terms of the count that I'm looking at, I believe we have a wave 1 that came in this first rally. We talked about that, 1120 to 1220. We had a 38% retracement. I believe this concluded our wave 2, and I believe that we are currently in wave 3, and now we're looking at the subdivision of wave 3 as a 1, a 2, and this, of course, would be the beginning of that third part of the wave. We would probably see a 4th and then a 5th. I believe that this entire rally over time will terminate with gold prices trading to roughly 1,280, which is a 1-to-1 relationship. In other news and other markets that we follow, according to a statement made by President Trump saying it's going to be a massive tax plan, that was the impetus, and partially cited along with some strong economic data, moving the U.S. equities markets to yet a new all-time record high. Feel like a broken record, but it's a good broken record. Dow Jones at 20,600 now, 20,611.86, up 170 points. When we look at the low, that was 496, and the high was 620, so just a couple of points off of that. NASDAQ having the strongest of performances in the indices, up about 0.6% at 58.18. And then the Standard & Poor's, the S&P 500, up about 0.5% at 23.49. Lastly, do want to take a look at the dollar index. Dollar index was flirting a little bit higher. Well, if time permits, we'll certainly take a look at a dollar chart. You can see that. But in fact, is now trading lower at about 101.05, putting it down about 0.2%. So traders, you know that on many occasions I talk about single candlestick types. And on the gold forecast portion of today's show, we spoke about the fact that what we had seen is a market moving from a downtrend and then getting a particular candlestick type that's simply called a hammer. Now, a hammer is part of the umbrella group of candles, and there are four individual candle types that make up that group. A hangman is one of them. An inverted hammer is the other one. A shooting star is also one of those. And the shooting star is the opposite of an inverted hammer. In other words, it's the same candlestick type. It would look the same, except if we had this candle appear at the bottom or following a decline in prices, and then that candlestick occurs down here, that's when it's called an inverted hammer. After a defined uptrend, as we're seeing in the dollar, it is called a shooting star. Of course, you wouldn't act upon it without confirmation. Confirming candle would always be a red candle with a lower low and a lower high than the previous day. So it would look something like that, and you'd fill that in with red. That being said, we're seeing for the first time some real pressure in the dollar. Interestingly enough, the dollar traded much, much higher, and that came out, I believe, during testimony by Yellen, because, of course, if we have inflation kind of ramp up, and if they hike up interest rates further than currently assumed or believe, then you're going to get a real bullish push in the US dollar. And so that's what we saw at the beginning of the day. However, for multiple reasons, we had this market dramatically trade lower. And in fact, just as in the discussion we had about the hammer, in which it had traded to lows, but once it hit those lows, what we saw were traders bidding that market back up. In other words, there was really a lot of buyers waiting for that price to come in, and therefore taking it to or above. In the case of gold, the opening price, we're getting the exact opposite in the dollar, in which they bid it up. And at that point, there were many traders out there believing that it was too costly and began to sell that market, actually taking it below the open. So traders, absolutely a volatile day in the market, with really gold prices going down to about $12.17 on an intraday low basis. Of course, with Yellen's testimony today, her second day of testimony up on the Hill, as well as statements made by Donald Trump about the tax plan, which is forthcoming and forthcoming quickly, we saw some pretty strong market gyrations and pretty strong volatility in the market. We have been flat, of course, since we pulled profits at 29. At this point, all traders are flat in the market. Those trading multiple positions were stopped out today. Our single contract traders, of course, pulled profits back at 12.29. And my belief is that we are looking at the potential of having a strategic entry point to get long this market again. We could see more downside pressure, but my sense is that we're probably forming a base or a bottom in gold pricing. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.